In this video, we'll be discussing the factors that you need to consider when deciding whether you should buy a house in Ireland now or wait until next year. Starting with house prices. Research from the Banking and Payments Federation Ireland, or BPFI, showed that house prices in Ireland increased by 8.7% between January and December 2024, compared with an increase of 4.1% between January and December 2023. The increase was most pronounced among second-hand homes, with house prices growing by 10.5% in 2024 compared to 5.2% for new builds. Put simply, Irish house prices grew significantly in 2024, but we still saw 48,775 purchases of residential property in the 12 months to December. Looking at the most recent residential property price index from the Central Statistics Office, we can see that the median price of a house purchased in the 12 months to February 2025 was €360,000. On the upper end of the scale, the median price for a property in Dún Laoghaire was €670,000 compared to €185,000 at the lower end of the scale in Leitrim. Interestingly, the border counties of Cavan, Donegal, Leitrim, Monaghan and Sligo saw the largest growth in house prices at 13.4% in the 12 months to February 2025. The most expensive air code was Blackrock in Dublin, with a median price of €747,750 compared with Castlerea in Roscommon, which had the least expensive price of €148,000. A median house price of €360,000 would suggest that a first-time buyer couple would need to have a deposit of €36,000 and a combined income of €81,000 in order to purchase a home, with the maximum mortgage permitted under the loan-to-income and loan-to-value limits. That's assuming no exemptions are granted from their bank in the way of higher lending limits. For prospective home buyers who wish to live in Dublin or the surrounding counties, the median house prices are unsurprisingly higher. Purchasing the median property in Dún Laoghaire would require a deposit of €67,000 and a combined income of €150,750. For the rest of Dublin, you're looking at a deposit of €45,000 and a combined income of €101,250. Wicklow is somewhat similar, with the exception of Bray and Greystones, where median prices are €550,000 and €510,000 respectively. Meath and Kildare are more accessible, with median prices of €372,500 and €405,000 respectively. Looking at the historical trends, the CSO reports that the National Property Price Index is currently 17.3% above its highest level at the peak of the property boom in April 2007. However, the Economic and Social Research Institute, or ESRI, noted in December that accounting for inflation, current house prices are actually 13% below the peak value, which occurred in January 2007. Pick your poison. Either way, it's fair to say that Irish house prices have increased a lot, with national property prices having increased by 161.6% from their lows in early 2013. The rock bottom interest rate set by the European Central Bank between 2013 and 2022 played a significant role in the appreciation of Irish house prices during this period, as did the inadequate number of new housing units relative to Ireland's population growth. The question is whether house prices in Ireland are currently overvalued. The following excerpt from the ESRI's quarterly economic commentary answers this question best. Quote, "The pickup in growth rates since early 2024 has provoked some concern about the sustainability or otherwise of current price levels, and whether a sharp correction, as was experienced from 2008 to 2012, is likely to occur again. From the above figure, it is clear that there appeared to be significant undervaluation in the Irish market in the period up to 2018. This was a fallout from the significant reduction in prices that occurred after the global financial crisis. House prices increased sharply and persistently during this period. From 2018 to 2022, the housing market was in equilibrium, with actual prices and those suggested by the model being practically the same. However, a divergence has emerged over the past 18 months, with actual house house prices now somewhat larger than those suggested by the model. Based on the most recent data from Q2 2024, Irish house prices are overvalued by somewhere in the region of 8 to 10%. So yes, it would seem that there is a degree of overvaluation in the Irish property market, and if the most recent house price data was to be used, the percentage of overvaluation could very well be higher again. However, that doesn't mean that a crash on the scale of the financial crisis is on the horizon. The Celtic Tiger housing market was propped up by unsustainable lending practices and was comparatively much more overvalued than our current housing market. That doesn't make it any more pleasant to deal with, mind you, as housing affordability in Dublin, as measured by the house price to income ratio, is still classified as seriously unaffordable. But it should serve to tamper expectations about any sort of impending apocalyptic crash in the Irish housing market. But there's no doubt that the rise in median house prices has made it increasingly difficult for first-time buyers to save for a deposit on a home. Research from PTSB suggests that only 41% of first-time buyers have saved enough for a deposit on their home, while 33% have some savings in place but not enough for a deposit, and 25% have yet to start saving. For many, the objective of saving for a house deposit, when coupled with exorbitant rents and a high cost of living, can oftentimes take years to accomplish. The prospect of leaving tens of thousands of euros on deposit with the Irish banks, earning very little interest for years while saving for a deposit, is a not so pleasant reality facing many home buyers in Ireland. That's where the sponsor of today's video can help. With Raisin Bank, home buyers in Ireland can store their house deposits in a wide range of European savings accounts, offering better interest rates and/or terms and conditions than the accounts offered by the traditional Irish banks. With over 25 banks to choose from, offering a combination of both fixed term and instant access savings accounts, Irish home buyers are no longer restricted to AIB, Bank of Ireland and PTSB when it comes to saving for a deposit on a home. The biggest benefit of using Raisin Bank is that the majority of savings accounts allow for deposits up to €100,000 to be made in one go, with the minimum deposit starting as low as €1. This enables Irish home buyers to earn much higher interest on larger account balances from day one, instead of being restricted to the low monthly maximum deposit limits that are imposed by the Irish banks. This is perfect for anyone starting their savings journey with a couple of €1,000 already in the bank. There are no fees or charges associated with using Raisin Bank, and most importantly, home buyer deposits are protected under the European Deposit Guarantee Scheme up to €100,000. The same protection afforded to deposits held with AIB, Bank of Ireland and PTSB. So you can rest assured that your money is in safe hands. Because these are European savings accounts, Irish deposit interest retention tax, or DIRT, is not deducted at source, meaning you'll get to keep more of your interest for longer before declaring the income on your tax return. Having recently won Best Savings Provider at the Bonkers.ie Awards, Raisin Bank's desktop and mobile savings platform is quickly becoming a top choice for Irish savers. Signing up takes minutes rather than weeks, and a dedicated customer support line is on hand to answer your questions. You can sign up for a free account with Raisin Bank and nab yourself a €50 signing bonus by scanning the QR code on screen or by clicking the link in the video description or pinned comment in the comment section. Thanks again to Raisin Bank for sponsoring this video. The construction of new houses, or rather the lack thereof, is commonly referenced as the primary driver of the Irish housing crisis. So it's important to assess how housing development is progressing when deciding whether or not to buy a house now. In March, the BPFI published their Housing Market Monitor report for Q4 2024. In it, it was noted that more than 69,000 new homes had started construction in Ireland in 2024, the highest single year total since 2006, and more than the total number of homes started in 2022 and 2023 combined. Now, while the headline sounds increasingly positive, it is somewhat misleading. The report goes on to note that at least 50% of the housing commencements in 2024 were due to uncertainties over the extension of the development levy waiver and and the water connection charge refund scheme. In an interview with the then housing minister, he noted that both of these initiatives saved up to €20,000 per housing unit combined, which in turn led to a sizable increase in housing commencements by developers in order to avail of them. Looking at the South Dublin County Council's website, we can see that the development levy waiver expired on December 31st, 2024, and the water connection charge refund expired on September 30th, 2024. Notably, for housing commencements that availed of the temporary waiver scheme, the completion date for construction must be no later than December 31st, 2026 in order to avoid clawback of the relief granted, an extension of the original date of December 31st, 2025. For that reason, the BPFI anticipates that the completion dates for the housing units commenced in 2024, as well as a number of units commenced in late 2023, will actually span across both 2025 and 2026, with an estimated total housing output of 75,000 units, giving an average of 37,500 units per year. The official estimate for completions in 2025 is just under 40,000 units. Moral of the story, while the large uptick in housing commencements is certainly positive, do not take it to mean that annual housing completions will also see a significant increase. The uptick in commencements in 2024 was largely a result of developers taking advantage of expiring government initiatives in order to save money on construction costs. The construction of housing in Ireland still faces its fair share of challenges, not least of which is funding. It's estimated that Ireland will require €18 billion per annum in private investment in order to execute on the government's plans to build 300,000 homes over the next 5 years. In fact, Irish representatives recently attended the MIPIM real estate conference in France in a bid to attract foreign investment into the Irish property and development market. Among the attendees were sovereign wealth funds, international institutional investors, i.e. private investment funds, as well as a number of global insurance and pension fund managers. I think this is really important to be aware of because populist narratives would have you believe that foreign institutional investment in Irish property is a leading contributor to the Irish housing crisis, whereas in actual fact, such funding is needed to solve the Irish housing crisis. Financing challenges aside, there's also an increasing shortage of workers in the construction sector itself, which of course is a big problem because you need an adequate construction workforce in order to build homes at the desired scale. Suggested reasoning for the shortage of construction workers includes a lack of new skilled workers entering the workforce, with young Irish people opting for university degrees, tech-related careers, and careers abroad over apprenticeships, creating a skills gap across carpentry, electrical, and bricklaying trades. Ireland's construction workforce is also aging, with many of the most experienced workers heading into retirement without a corresponding increase in younger workers entering the sector to replace them. Another challenge which you might not even know about is utilities. BPFI notes increasing signs of delays in securing connections for utilities such as water and electricity for new housing projects, with Irish Water in particular stating that they are restricted to connecting 35,000 new homes per year, thereby necessitating further investment in order to increase capacity. The mortgage market is another key factor to consider when deciding whether to buy a home in Ireland now or wait until some point in the future. A recent development in the mortgage market that, in my opinion, didn't get enough coverage was Avant Money announcing their Flex mortgage product. This mortgage effectively marks the reintroduction of tracker mortgages into the Irish market. It operates by offering Irish home buyers a variable rate that is tied to the 12-month Euribor. Put simply, your mortgage rate at any given point in time will equal the 12-month Euribor rate updated on the 10th of each month, plus a profit margin that is set by Avant. The amount of profit margin is determined by reference to your loan-to-value ratio, with LTVs in excess of 80% commanding a margin of 1.1%, while LTVs less than or equal to 80% will see a margin of 0.9%. That currently results in an APRC of 3.58% for LTVs above 80% and an APRC of 3.37% for all other LTVs, which, as of recording, is considerably better than the variable rates on offer by AIB, Bank of Ireland, and PTSB. The beauty of having a variable rate that is tied to a benchmark like the Euribor is that it reduces conflict of interest and increases transparency, as the benchmark rate, which is totally independent of Avant Money, determines the mortgage rate of the customer. Conversely, the standard variable rates offered by AIB, Bank of Ireland, and PTSB change at the discretion of the banks, and the banks are clearly incentivized to set their variable rates in such a way as to maximize profitability. There's usually little transparency around the process. What's even better about the flex mortgage from Avant is that the profit margin that they add on to the benchmark is guaranteed to remain the same for the life of the mortgage, so they can't decide to get profit hungry in the future and skyrocket the margin on your mortgage. Outside of new mortgage products, the European Central Bank, or ECB, has cut rates on 7 separate occasions over the past 12 months, with the latest 0.25% cut bringing the main refinancing rate down to 2.4%, the lowest it's been since November 2022. Now, the main refinancing rate is the rate at which banks can borrow money from the ECB for 1 week, but it's also the rate that's most influential to the mortgage rates set by the Irish banks. When ECB rates are trending downwards, Irish consumers could reasonably expect a decline in the fixed and standard variable mortgage rates offered by the Irish banks at some stage. However, there are no immediate rate cut guarantees for customers, with the exception of customers who have tracker mortgages linked to the main refinancing rate. Going back to Avant's flex mortgage, which is also a tracker mortgage, because interbank rates like the Euribor have a strong response to changes in the ECB's main refinancing rate, Irish consumers on this product could also strongly expect their mortgage rate to fall alongside the main refinancing rate. Forecasts suggest that the main refinancing rate could fall as low as 1.75%, which would likely be beneficial in terms of mortgage costs for Irish homebuyers. However, research from the Central Bank of Ireland suggests that Ireland is currently the 5th most expensive country for mortgages in the euro area, behind Latvia, Estonia, Lithuania, and Slovakia. Our weighted average interest rate on new mortgage agreements is 3.79%, as compared to the euro area average of 3.33%. Mortgages in Ireland are comparatively expensive to the rest of Europe, primarily due to both the high capital requirements imposed on Irish banks by regulators and the difficulties experienced by Irish banks when repossessing property for mortgage defaults. With that said, the introduction of Avant Money's flex mortgage, as well as the ambition for Irish credit unions to reach €1 billion in annual mortgage lending over the next 2 to 3 years, are steps in the right direction for increasing competitiveness in the Irish mortgage market and improving outcomes for mortgage customers. Ultimately, whether you buy a house in Ireland now or wait until another point in the future depends on your own personal circumstances. Yes, factors like house prices and mortgage rates can be more favourable at one point in time versus another. However, these two factors often come with an inverse relationship. Lower mortgage rates often prompt higher house prices, with the higher price of the home necessitating a larger mortgage, albeit at a lower rate, thereby offsetting some of the benefit of the mortgage rate reduction. Likewise, lower house prices could result from rising mortgage rates, with the higher interest costs offsetting some of the benefit of the lower house price. So it's not the be all and end all. Plus, while housing completions and commencements are ramping up, there's no getting away from the fact that housing supply will continue to be an issue for years to come, especially in the face of labour shortages, financing challenges, and utility restrictions. So expect house prices to continue rising, particularly in the context of the European Central Bank cutting interest rates. Renting is not an overly attractive alternative either, with the BPFI recently noting that Ireland was among the 3 EU countries where rents had increased more than house prices between 2010 and 2024, and had the 3rd highest increase in rents at 106%, following Estonia and Lithuania. Coupling all of those factors with a desire to own property and to move forward with life milestones such as getting married and having children, one couldn't be blamed for wanting to get on the Irish property ladder ASAP. It's certainly not easy, but there are supports in place to assist you, like the Help to Buy scheme, the First Home scheme, and the local authority affordable purchase scheme. Let me know what your thoughts are on the current state of the housing market in Ireland, what your experience has been, and what your plans are for purchasing property going forward. Again, if you're looking for a competitive alternative to AIB, Bank of Ireland, and PTSB when it comes to saving for a deposit on a home, you can try out Raisin Bank for free and nab yourself a €50 signing bonus by scanning the QR code on screen or by clicking the link in the video description or pinned comment in the comment section. Thanks very much for watching, and I'll see you in the next one.